Hey everyone, welcome back to Young Wealth Builders. I'm Madeline.
And I'm Jocelyn. Today we're talking about something everyone has, but not everyone understands bank accounts.
But before we do a little deep dive, Jocelyn, what are you drinking today?
I'm drinking the tropical vibe. I love a little bit of Herbalife in my life. What about you, Madeline?
I'm drinking Black Pearl today.
Awesome. We're here at the Daily Dose enjoying some yummy energy in a cup. We just finished our networking meeting for the day where we talked about budgeting and our different budgeting tactics. It was a great meeting and I was honestly surprised by the turnout.
That's great. Our networking group, Young Wealth Builders, meets every Thursday at 8 a.m. If you're local to Fargo, come check us out. We are all about creating a safe space where young financial literacy enthusiasts, which is me and Jocelyn,
Oh, yeah.
can come together to learn and share. Think of it as this podcast, but then imagine it being in person and with energy tea. If you can't make a meeting, you can subscribe to our Substack and gain full access to recordings of our meetings.
Perfect. Let's dive into all the different types of bank accounts, what they actually do, and how to know which ones you should have, especially if you're just starting out.
This sounds kind of confusing.
Yeah.
So, we're going to play a little quick game halfway through called Keep It or Kick It, where we decide which accounts we'd actually keep if we had to simplify our money life.
Because let's be honest, nobody needs 17 different accounts they never use.
And they don't even know what they do.
Exactly.
So, let's start with the most basic ones. First off is checking accounts.
Checking accounts are your everyday, use me for groceries and rent accounts. It's where your paycheck usually gets deposited and it's where your debit card is linked.
Right. So, money goes in, money goes out. Simple. You can pay bills, swipe your card, or use Venmo, all through your checking account.
But here's the catch. Some checking accounts have fees, things like overdraft fees, minimum balance fees, or even monthly maintenance fees.
Yes, and that's why it's so important to choose a bank that doesn't nickel and dime you just for existing.
Most of us are here trying to build wealth, not spend it on bank charges.
Yep, here's a quick tip. Always make sure your checking account is linked to a small savings account as a backup. That way, if you overdraft, it just pulls from there instead of charging you a $35 fee.
All right. And that ties us into our next one, savings accounts.
Savings accounts are meant for the future you. It's not for your daily spending. It's for things like emergencies, big goals, or anything else you don't want to blow through.
Yeah, I have a savings account for my emergency fund, so just in case there's a big emergency,
Hmm.
and a house fund, so I can buy a house one day in the future. Savings accounts usually earn a little bit of interest, which means the bank pays you for letting your money sit there. But, and here's the sad part, that interest is usually super tiny.
Yes, like tiny to the point where you might make enough to buy one iced coffee per year.
Maybe.
Maybe. Yep. It's still important though because it separates your money mentally. Out of sight, out of mind, out of spending.
Plus, having the savings account is step one to building an emergency fund, something that everybody should have.
Hmm.
We talked about what an emergency fund is in the last episode about financial literacy terms. So, tune into that if you want to know what that is.
Right. And just a tip, if you can only save $10 or $20 a paycheck, start the habit now.
Yes, it's so important to start as soon as you can.
Yep.
All right, now we're going to get a little bit more fancy. High yield savings accounts. What are those?
These are savings accounts, but they actually pay you more interest. So remember that one coffee per year we talked about earlier? This could make you save up to maybe buy a few more coffees a
Exactly.
year.
Think of it like your money's working a side hustle while you sleep. I have money in a savings account for my emergency fund, and I think that interest rate is like 1 to 2%.
Hmm.
And then the money in my high yield savings account for my house fund, since I
Hmm.
won't need it for another few years, that is at a 4% interest rate. So it makes you way more interest.
Right. Think of it as something to put money in a high yield savings account, you're saving for something that could be further down the line.
Yep.
While in a traditional savings account, you're saving for something that might pop up or just having that money set aside.
Yep.
So the difference can be huge. A regular bank could give you a 0.01% interest, while a high yield savings account could give you 4 to 5%.
Mhm. which sounds small, but it adds up. If you have $1,000 sitting there, you'll earn around $40 to $50 a year instead of 10 cents.
Yep. A lot of these are online only banks though, so you might not have a physical branch.
Yep, that's the trade-off. Higher interest, but no drive-through teller or free pens.
Yeah.
I think it's a beneficial thing though. My high yield savings account is through an online banker, so I'm never gonna go see my banker, but I know that the FDIC is insuring it, so it's still safe.
Yep. I honestly, I'll give up the free pen for a 4% interest any day.
Yeah,
I could just go buy a pen at the end of
with
my
the interest that
Yeah,
you just made.
exactly.
One thing to watch out for with a high yield savings account though, some high yield savings accounts require a higher minimum monthly balance to open or to earn that top rate. For example, there's a bank that I've looked into, but they require a $50,000 minimum
Whew.
balance. I do not have $50,000, so obviously I am ineligible for their high yield savings account.
Right. So before you sign up, check the fine print. Sometimes you need to keep $1,000 or even $5,000 in the account to get that high rate, but sometimes you don't. The one I
Sometimes you need
used,
50,000.
well, yes. Or some of them you need 500 or
Yep.
100 or $50. It totally depends. So just read the fine print.
Yeah, exactly. But if you've got a solid emergency fund started, it can be a great way to let that money grow faster while it stays safe. So for an emergency fund, you can keep it in a regular savings account or in a high yield savings account. The only main difference other than the interest rates is that a high yield savings account typically has a higher minimum balance than a regular savings account. So if you only had 10,000 saved and you had a medical emergency for $9,900, you might not be able to take all of that out of your high yield savings account without it charging you or having to close the account. Whereas you could be able to take that out of your regular savings account with no charges and everything. So,
Right. And the only other thing is you might only be able to take money out of your high yields account a certain amount of times per
mhm,
month, but it's usually a reasonable number, like 4 to 6 times per month. That's taking money out every week, which is not the goal when you're using a high yield savings account. But, anyways, next up, let's talk about CDs. And no, not the kind our parents burned in high school.
right? CDs in banking are called certificates of deposit. Basically, you agree to leave your money with the bank for a set period of time, like 6 months, a year, or even 5 years, and they pay you a higher interest in return.
Yep. So it's like a deal. I won't touch this money, but you give me more in return.
Exactly. But if you take that money out early, you usually pay a penalty, kind of like canceling a gym membership before your contract's up.
Mm-hmm. CDs are great for money you don't need right now, but you'll want later, like saving up for a wedding or a down payment on a house.
And fun fact, some banks will match CD rates with competitors. If your bank CD rate is 3% and the next door bank is 3.5%, ask your bank if they'll match it. Oftentimes, they would rather match it than lose your business.
It's all about negotiating, which we will go over in a future episode.
We have a little mini series on all things negotiating finance.
Yes. But for now, let's move on to the next account. This next one's a weird mix between a checking and a savings account, which is a money market account.
Yeah, money market accounts usually earn more interest than a regular savings account, but like a checking account, you can also write checks or use a debit card for limited transactions.
Right. So it's like a halfway point. It's good if you want better interest, but you still need access to your money every so often.
Most banks do require a higher minimum balance for these, so they're best once you've built up some savings already.
Right. Think of it as your next level account once you've got the basics down.
And here's something most people don't know. When you open a money market account, the bank actually invests part of your deposited money into very low risk, short term investments like treasury bills or certificates of deposit.
Mm-hmm. That's how they can afford to pay you a higher interest rate than some of the other regular savings accounts. So they're earning a little bit extra behind the scenes, and they're sharing some of it with you.
But don't worry, it's all considered super safe. Your money is usually insured by the FDIC, just like any other savings account. But again, make sure to check the fine print if that is something that you're worried about.
Always read the fine print.
Yes.
So you're still getting a better growth without the stock market risk.
All right. It is game time. We're calling this one Keep It or Kick It.
We'll go through each type of account we just talked about, and then say if we'd keep it or kick it. Basically, is it worth having or not for someone in their 20s?
Ready? Let's go. Checking account.
Keep it. Always keep it. It's your daily lifeline.
Exactly.
Next is savings account.
Keep it, especially for your emergency fund. How about a high yield savings account?
Keep it. It's free money from interest. How about a CD?
That one depends. Kick it if you need access to your money right away. Keep it if you've got extra cash you won't touch for a set period of time.
Mhm.
What about the money market account?
Keep it once you're further along.
Yeah, I like this. This is fun. It's like swiping right or swiping left for bank accounts.
Financial Tinder. All right, so how many accounts should someone actually have?
Honestly, start simple. One checking, one. Once you're consistent, add a high yield savings account or a money market account later.
Right, maybe once you have some money set aside for your emergency fund, that's when you can go into the high yield accounts or a money market. And the key isn't how many accounts you have, it's how you use them.
Exactly. Having 10 accounts does not make you good with money.
Yep.
Using 1, 2, or 3 accounts really well does.
And remember, everyone starts somewhere. Whether you're opening up your first checking account or finally setting up that emergency fund, it's all part of building your financial foundation.
Yeah. Thanks for listening to Young Wealth Builders. Don't forget to follow the podcast, share it with a friend, and tag us when you make your next money move. And if you're opening up an account today, comment and let us know which one you're going to open.
Yes, please do. And comment if you have any questions about anything we went over today.
Exactly.
So we will see you next week.
Until then, go make a smart money move.